Hello guys, glad to have you on board again today. Yes, it finally did happen. So it wasn't necessarily the most probable outcome, and once again we're going to discuss about that and most importantly the technical implication of it. But yeah, Russia did somehow militarize that conflict, and we'll see all about what the prices tells us about that story, what are the most probable forthcoming events down this line, and most importantly what you can actually eventually do about it. But until then, I would like to be very cautious. I've previously given you a set of things to look at, not necessarily actively trade on, but to look at if you want to make sense of what really is going on. So don't listen to the news flows and all of these things. They are either clickbait stuff in which they try to make it better or worse than it actually looks like. They try to make it easier or simpler to understand that what it truly complicatedly is. So we need to set things aside. If you are talking about it in a geopolitical or philosophical perspective, well, of course, this is not what we do here. We're not going to dive down these areas. So in terms of trading perspectives, what we can do about this Russian situation and the geopolitical mess that we're into now, well, we have to set some ground rules. And these ground rules, in my personal opinion, hasn't changed at all. We had set to look for gold, Apple, and Ethereum as a reference. So let's do this, okay? Let's use this framework that we've set it for this. So in terms of gold, of course, I've been putting into the volatility perspective because that's definitely a volatile event that we're experiencing now. So I'm not going to use trend channels, and we already assessed that trend channel stuff. So in terms of volatility boundaries, we're far off in terms of gold. So gold is definitely accelerating to look for the closed volatility boundaries that there is on top of our heads. So I don't think it's an appropriate time to scare your shit and sell everything or whatever. I think there is limited upside potential for gold, but in the short run we clearly have accelerated above the volatility boundaries, which means this is not an appropriate time to play God and buy the dips without rational levels to act on. And most importantly, there could be follow through within the next few days without a problem because there's still room to the upside. We'll see all about that, of course. My second concern is about Apple, because Apple closed at the lows yesterday, right on supportive areas, and as we've mentioned with the friends guys, the active support is in this area. This is the last remaining support for Apple, and it is 2% below prices. So we're probably going to open at that level today on Wall Street session. The big question is what it's going to be dealing with, how it's going to be dealt with, what it's going to be looking like, because of course in terms of volatility situation in Apple, well boy, the volatility boundaries are pretty damn far away from current prices. So if the shit was really going to hit the fan for Apple, there is way more downside to come. And in that perspective, we've made it clear this whole thing is a big, massive monthly bubble. There is no price, there's no value in here, and we could even settle for a monthly reversal pattern. That would be the end of that asset. I've always made it clear Apple is near the end rather than the beginning, and it's just a matter of time before it crashes out. Of course it will come over, which means there will be a dead cat bounce and then whatsoever, but I think Apple is building a market top of its price structure. I've always made it clear, so it's a matter of looking at Apple not to trade it, but to look at it as a potential candidate for volatility. And therefore I'm really curious to see what it's going to be doing today. Though I will not make any assessment until I've seen the US session and most importantly how Apple is going to be traded. If Apple for some reasons holds on to the support, well, that's going to be great. If Apple slips below the support but recovers it by the end of the day, it's good as well, okay? If Apple somehow reaches out the volatility boundary, well, we have a problem, okay? That doesn't mean this is the end, because I don't think there is going to be a straight line to the downside, but I think there could be kind of a relief rally for a couple of days, but of course the shit will hit the fan afterwards. We'll see all about that, okay? But these are the technical assessments for Apple. If there is a rebound today, that means we're going to keep accumulating in that big range before the huge release. But like I've always made it clear, it should rather like come closer rather than later to the next earnings release, which is not going to be anytime soon now. It's in May, okay? So be really cautious with that. I think there's still plenty of time to accumulate for Apple. There's no rush. What could rush Apple to the downside could be this military situation. So look out Apple's today. I'm still waiting to get that candidate's response before making more clear vision and sight. So that leaves us with the third guy in the area. which is our big boy Ethereum. So Ethereum is suffering quite a big volatile pattern. I've mentioned that we had one very recently on the 4-hour chart. That was the second one in a row, even though we've already hit the volatility boundary without rebouncing to the moving average, and we've kept pushing and pushing and pushing. And we had the second alert, meaning that where we are today is at the same volatility boundaries that we were experiencing earlier in this year. And in that perspective, I still tend to believe that this is a formation that I know, but the thing is that it's also volatile. So this area can be dealt very weirdly. And even though my personal assessment was we will get the same exact thing as we had today, but the opposite way, well, turns out we had the opposite of it, which means the monthly expirations here could definitely be reversed. I still tend to believe that the max pain for this thing to close a derivative contracts on the 25th of February are settled for a max pain at $3,000. And to be really honest with you guys, I think we're going to get there still. So what happened today could be very well reversed. Remember that what we have in terms of Ethereum situation is far different from what we're looking at when we look at gold, and it's far different with the technical situation of the actual very shitty weighting that there is in the stock market. Though this is what we look at when we look at Apple. We look at the very crispy risks when we look at gold, and I think there are limited risks right now. And when we look at cryptocurrencies, we look at a supposedly decorrelated asset class, which has nothing to pay attention to the actual military conflict. I see absolutely no direct link between ETH and Russia, but well, volatility. There are not enough coins circulating. There are very little of them. It's very volatile, and therefore prices are very easy to manipulate up or down. So the volatility gamble in here is market makers manipulating prices and looking to find some supply to whoever is going to be dumb enough to get themselves stopped out because they've been using leverage, or they're going to be weak hands thinking that for some reasons they need to sell because Russia is somehow going to go in an endless military conflict and that the rest of the world will dive into world war or whatever. Okay, so once again, weak hands are trading with short-term perspectives. Strong hands know that the short-term doesn't mean anything and that we need to be ready for chaotic structure. I definitely didn't think that these chaotic structure will be favored by downside outcomes, but I really knew that this could go both ways. Okay, so understand it that way. When I look at the broadest picture, I still need one of the three candidates to tell its story. So my major concern now is about Apple, and to see if for some reasons Apple is going to crash, because if it does, then it will send a different message that the military situation we're into, I think it's not necessarily going to go worse and worse than that. It will very likely shift toward geopolitical problems, which means now is going to be sanction time against Russia, and it's going to be more like a political situation than a military rise up. Though I think the military might have seen the worst. That's what the prices tell me. Of course, this is not necessarily my job to study all of these things. So I'm just looking at price and see that, well, I see limited upside potential on gold, leading me to believe that oil as well has tried to reach out $100, which failed, and there is significant resistance on top of her head. So I think that the military situation is probably at its peak, and it's going to translate into geopolitical tensions and sanctions, monetary sanctions or whatever. Reason why I've added RUB WCU, not versus the fucking dollar, which is as shitty as a currency as this one is now. But understand that in terms of volatility as well, we have some volatility set for the for the rubles. So in that perspective, understand that we are at the volatility boundary already. This could be looking like a final excess, trend, pullback, final excess. So there is still room to the downside. So that's the reason leading me to this conclusion. I think that the military situation is probably nearing its end. There could be another strikes within the next few days, but I think this is going to be limited. I don't think there's going to be general world war shit stuff or whatever, but I still tend to believe that the final cycle in here has a lot more room to go, and it's supposedly going to be as of a breakout. But of course, volatility can shift up this thing. So there's no need for a cycle breakout in this situation. Volatility can terminate the pattern. So I think we need to finish that cycle. So I think 2022 is not going to be an easy year to navigate for Russian's currency and Russian companies and stuff like that. There's going to be lots of sanctions around there. So complicated mess, but I think it's going to migrate over the geopolitical situation. Well, though, the problem is that we still have to deal with Apple, because if Apple crashes due to its heavy weighting on all ETFs and stuff like that, if it starts pulling down some massive losses, then we could have contagion of that risk into another sector, which will be a stock market crash due to Apple falling down the cliff. We know that this is possible, but that it is not likely in the short run. But this could be catalyzed by, for some reasons, excessive volatility coming from external factors like Russia. So we'll see all about that. And there is still the Fed to pay attention to as well for Apple. So look at this one. Okay, this could be a contagion type that will make the situation get worsen. Otherwise, I think this is not the case. When we look at cryptos, well, we had the emergency situation call out in which everyone is selling, not knowing why or what. They're selling it all because, well, like I said, this is just market makers shifting prices one way or the other. They're just manipulating it and trying to stop out the dumbs who've been trading too much short term. So now we've got a put to call ratio in big assets which is severely shifted to the downside, meaning that there is definitely a lot more gamblers in the derivative markets. Not an appropriate time. Remember that the exposure is to close on the 25th of February. So let the dumbs make their bets. Don't be among those who try to do it. You're here to trade. You're not here to gamble around what's the least worst possible scenario or whatever that is, okay? It's really what I think lots of people are doing now. Well, don't go down this road, okay? We're not here to play lottery or any of those improbable statistics, okay? So just understand it that way, okay? If you want to play lottery, go play lottery. It's going to be easier to handle than doing this in the market. You may always figure out what the statistical outcome are and what the risk is. We've assessed multiple times that the risks were visible on the charts due to the multiple volatility alerts that we've seen, specifically on the cryptos, that cryptos may be very sensitive to external factors, even though there is no clear correlation between Russian sanctions and cryptocurrency prices. They are sensitive to it, and we knew it. So, of course, I wasn't gambling on the military implication that there has been this night, but yet it happened. And, of course, it's been moving assets prices. But I don't think the value of cryptocurrency has changed a bit overnight. We've just gone to the same old volatility boundaries on Ethereum, and that doesn't change the whole story. Okay, so I think you've got everything. Of course, don't get me wrong, I'm not a geopolitical expert, so of course, don't take my words off of their context. I am a financial trader, so in that perspective, in a financial context, I don't think the situation is going to worsen, but I think we need to handle limited amounts of volatility, but still, lots of things could deteriorate, so the volatility may not be over. Don't try to catch the falling knives or whatever, but yeah, to be honest, the technical situation doesn't look that scary to me. Bye, guys.